that are taking place in the pensions industry. According to the World Social Security Report 2010-2011, published by the International Labour Organization, the main risk when one reaches old age is poverty or income security, owing to the loss of one's ability to earn income, whether partially or completely. This was the main justification for the first pension schemes, which emerged at first only in the highly developed countries, but which have since spread across the entire world. A pension or retirement scheme is an arrangement by which individuals are provided with an income, a regular periodic payment, when they have reached a certain age and are no longer earning a steady income from employment. Ladies and gentlemen, the entire world is aging. While men and women at age 65 and over now constitute only 8% of the world's population, they will be 16% of the population by 2050. Most of the elderly live in countries like Jamaica, where only small minorities are covered by any form of pension or retirement scheme, and where social security in general, including affordable access to essential healthcare services, is a luxury. At the recently held FSE pension seminar, held just last week, the Senior Director of Pensions, Mrs. Nicolette Hennes, disclosed quite alarmingly, in my view, that there has been a slight decline, yes, decline, of 0.15% from 6.86% in 2009 to 6.71% in 2011 in the overall percentage of the employed labor force in Jamaica who are members of a pension plan or approved retirement scheme. Ladies and gentlemen, we are clearly going in the wrong direction. Just last week, Dr. Adrian Stokes, Vice President Strategic Planning Projects and Product Development at Scotia Investments, opined in response to a question read the biggest challenges facing Jamaica in reducing our public debt, that Jamaica faces an interesting dilemma. In theory, the government should be pursuing an expansive fiscal policy to counter the economic slump. In other words, the government should be pursuing more spending as it relates to the building of infrastructure, creating employment opportunities, which will help to stimulate economic activity. Dr. Stokes indicated, however, that the country would have to bear in mind that there's a constraint on spending, since the market, both private and multilateral, is not in a position to lend the amount of money to the country that would move the growth needle. Let us think about this statement, which is already speaking to the fact that based on Jamaica's debt situation, we are not able to borrow the amount of money that we would need to stimulate economic growth that is so badly needed in our economy. Dr. Stokes went on to say, therefore, that the government will have to cut primary expenditure, which is the day-to-day expenses for running the country, in the near term. However, cutting primary expenditure by itself will not be a sustainable or a long-term solution to reduce the debt burden. Ladies and gentlemen, our economy has to grow. And so the biggest challenge, the biggest policy challenge facing us as a country is achieving private sector-led growth while the government is pulling back. I'm sure you'll agree that this will not be a simple task. I would, however, suggest that harnessing a greater amount of private savings and pension assets will be one way of providing the badly needed fuel for private sector-led growth. This could be accomplished by the appropriate changes in our tax laws, changes in the government pension funding arrangements, and maybe most controversially, mandating pension contributions by all employees and self-employed persons. This would provide an appropriate mix of carrots and sticks to generate an increase in pension savings in Jamaica. This type of strategy is not novel or new. It has been tried and proven successful, particularly in Chile, and requires only the political will to be tried and succeed in Jamaica. It must be, however, acknowledged that the pension legislation, phase one, and the introduction of approved retirement schemes in the Jamaican marketplace in the last decade was a step in the right direction, and it has provided financial institutions like Scotia Life with a product that will meet the needs of particularly individuals for a retirement savings vehicle. Scotia Jamaica Life Insurance Company was one of the first financial institutions to market an approved retirement scheme in 2009. And we are particularly proud that we now have a 44% market share of the approved retirement scheme market. And this is based on our current membership of 7,710 persons. In 2010, FSE statistics indicated that 3% of all pension plans were approved retirement schemes, and membership in an approved retirement scheme was 11% of the pension industry, or 8,710 members. As of June 2011, the membership in retirement schemes has doubled in 6 months, from 8,170 to 17,554 members. Clearly, the Jamaican consumer is finding an appetite for approved retirement schemes. But as I said earlier, based on the decline in the percentage of the Jamaican labor force that is in a pension or retirement scheme, we still have a long way to go. I hope you will find this seminar informative and useful. And I think it will be appropriate for me to introduce the best management team in Jamaica. And I'll ask them to stand as I introduce their names. You've already met Lana Forbes. She's our Director for Sales and Channel Delivery. Marsha Ramjeet Williams, our Manager for Finance and Reporting. And I hope I'm not taking tales out of school, but St. Elmo Whyte said that Marsha could manage his finances anytime. Denton Campbell, Manager of Operations and Service. Erica Anderson.